And in our top business story, with price of oil currently hovering around $40 and as governments and key policymakers in the MENA region look at reforms to diversify revenues, regional CEOs and top executives from the GCC have met today to discuss future investment opportunities beyond oil in the MENA region. The three-day conference in Dubai opened with a session titled "Can MENA Escape the Boom and Bust of Oil Markets?", where organizers at EFG Hermes stated that lower oil prices, volatility in the capital markets, and a divergent monetary policy between the US, the European Union, and Asia all contribute in making 2016 a challenging year for MENA markets. They added that investors with strong cash flows, robust balance sheets, and good management teams can still discover unexplored opportunities in the MENA region. The opening session saw many institutional investors vote electronically on questions regarding MENA markets, including one in which 47% voted UAE as the favored destination to deliver the greatest returns over the next 3 years in the MENA region. While on another question, on whether MENA markets can escape from oil boom and bust, the vote was evenly split, with 53% showing confidence in the argument.
The UAE economy is obviously the most diverse in the GCC. They've been, in a way, preparing for this moment of low oil prices for many, many years. I think Dubai, in a way, is blessed because it doesn't have a lot of oil. It's been forced to think about what it can do to diversify its economy. So we have trade, we have tourism, we have financial services. I think the UAE in general, as a federation, is following that lead that Dubai has set. And I think something that's good for the UAE this year and next year in particular is, yes, oil prices have fallen, but you have the Expo coming up. You also have the opening of the Iranian economy, and that's something that can help the UAE while other economies in the GCC are struggling. The key is setting up a sort of legal and regulatory framework where healthcare companies, education companies can take advantage of the growing market. So it's very clear in the UAE, more and more people are coming here. I think for healthcare there's an interest in medical tourism. I think what the authorities need to do, and they have done this already, is to create a good regulatory environment in which such companies can thrive.
It was revealed during the conference that the net outflows that many regional markets recorded in January and early February are now stabilizing as investors look for value, particularly in the GCC region. The latest edition of the annual conference will see more than 455 international fund managers and institutional investors holding face-to-face meetings with more than 117 leading companies from the MENA region. Presenting companies are drawn from 14 sectors, including real estate, energy, and healthcare.
There's a lot of infrastructure here already, right? And they've built beautiful schools, beautiful hospitals. You could have, obviously, healthcare tourism. You could have, there could be a great innovation center because of the universities, but you have to step up the level. That's all. You know, it's not enough to have the beautiful buildings. You know, it's really about failure. It's really about, no, you have to be this good, or else you're out. And that's the mindset part.
It's difficult to argue that lower oil prices are not. Don't create a difficult environment for business in general, because it reduces liquidity, at least, and government spending for sure, and that has some impact on the economy. Now, I think businesses which are not very leveraged, that have a strong brand, that have good pricing power and strong balance sheets, they will continue to do well. And I think probably lower oil prices will push government to accelerate reforms, which eventually will be good for business, because it means more transparency, more regulation, and less reliance on oil revenues. Eventually will be a positive thing for the economy and for businesses which are well positioned for this cycle.
Abu Dhabi-based lender FGB is forecasting low single-digit profit growth in 2016. The bank's chief executive, Andre Sayer, stated that he was expecting low single-digit growth across the board in earnings, revenue, and loan growth this year. Mr. Sayer said that net interest margins would improve, but now that deposits from the sale of crude are dwindling, the reduction of the supply of cash would raise borrowing costs. The bank's net interest margin, or profitability of the loans it grants, fell to 3.27% at the end of December 2015 from 3.58% at the end of December 2014. At its general meeting, FGB ratified a plan to distribute 1 dirham per share to investors on 2015 profit, a 15% increase compared to 0.86667 dirhams in 2014. The bank's earnings in 2015 rose 6% to 6 billion dirhams, joining many of the other big banks in the UAE in posting higher overall growth last year. Dubai-based developer Damac Properties has proposed a 15% cash dividend payment for the second half of last year, bringing the total to 25% for the year. The company is recommending that its shareholders approve the 15% dividend payment at the forthcoming annual general meeting based on its performance during the second half of last year. Shareholders had already received an interim payment of 10% for the first half of the year, as well as being awarded a further 10% in bonus shares. A spokesman for the Damac Properties said that it is maintaining its guidance target first set in 2014, which stated that it would propose to pay a dividend of at least 25% in cash both last year and this year. Last month, Damac announced that its full-year profit increased by 40.6% to 4.5 billion dirhams, up from 3.2 billion dirhams a year earlier. Revenue more than doubled to 8.5 billion dirhams. However, fourth quarter profit fell by 8% to 842.8 million dirhams. Fellow Dubai-listed developers Emaar Properties, DR Development, and Union Properties have yet to announce final dividends for last year.